After ranking as one of the nation's top secondary markets in 2011, Charleston stumbled a little bit in 2012's first quarter, but it's really just one submarket holding things back, and overall this market still looks good. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charleston update. In 2011, few markets were doing better than Charleston. Revenues jumped 8% year over year due to strong progress in both occupancy and in rents. And as you can see, Charleston sustained annual rent growth of 7 to 8% through all of 2011. And again, revenue growth is a combination of shifts in both occupancy and in rent. But 7 to 8%, that is unsustainable over the long term for a market like this. And so in Q1 2012, you could see revenue growth levels fell to 4.6%. And that was due to a rough patch in Q1 specifically. Let's look at occupancy. Occupancy had jumped 1 point or more in 3 of the previous 4 quarters, but in Q1, backtracking of 0.7 points, taking occupancy to 93.6%. And rents, take a look at this chart showing quarterly rent change. And as you could see, there's no bar in Q1. That's because rent change was flat at 0.0%. And that was the first time in 9 quarters that rents did not climb on a quarterly basis. And now, as we mentioned earlier, much of the slowdown in Q1 can be pinned on just one submarket, and that is Summerville, Northwest Charleston. Rents there plunged 4.4% in first quarter, a huge drop, and that came after big hikes in the previous 5 quarters. And Charleston's other 3 submarkets, by the way, all saw quarterly rent hikes, and rents were falling here because occupancy also took a big dip. Occupancy in Summerville, Northwest Charleston fell 2.2 points in the quarter to a rate of 90.5%. And as you can see, that is well below the other submarkets in Charleston. North Charleston, Goose Creek is at 93%, while the other 2 are 95% or better. West to Ashley, 95%, and the downtown Mount Pleasant Island submarket at 95.5%. So the strength of Charleston's apartment market elsewhere is certainly encouraging, and that suggests that perhaps we're just seeing a blip in the Summerville, Northwest Charleston area. And furthermore, the apartment sector should continue to benefit from an economy that's really charging back. Charleston's done a good job drawing major employers like Boeing to the area, and that's allowed for some good job growth. The metro added 6,300 jobs in the past year, as you can see from this chart. That expanded the employment base 2.2%, and that put Charleston in a tie with Raleigh-Durham for the biggest proportional increase in the Carolinas, and it would rank in the top 10 nationally if you would take out the high-flying Texas metros. And now Charleston has recovered 16,400 of the 20,900 jobs lost during the recession, so we should reach a full recovery pretty quickly. And that momentum should continue into the next year. We expect apartment fundamentals to continue to move in the right direction, but probably not that 8% clip we saw for much of 2011. And that wraps up for Charleston. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.